Hello, everyone. Today is Friday, April 30th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If you're new to these videos, welcome. It is nice to have you here. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets, market internals, sector performance, correlations, volatility, credit markets, all the good stuff, and pick apart everything that stands out and looks interesting. And then in part two, we jump into the charts, put everything from part one into context, and try and best position ourselves and make sense of this market looking ahead. So hopefully that sounds good to you. Let's dive into some of the headlines and takeaways from this week. We had a very busy week of earnings, kind of peak earnings season, if you will. Lots of the mega cap technology companies, huge mega cap market cap companies have reported earnings, and for the most part, they were blowout numbers. In terms of the numbers that they reported, really across the board, this earnings season has been very strong ahead of expectations. Now, we sort of knew this coming in because of the comps that these companies were going to be reporting against were a sort of a low bar, and the guidance and just how much the market has ran up into these numbers is what we were all waiting for. What's the reaction to the numbers? That's always what we sort of care about. And when we look at the action this week, it was pretty lackluster. We had numbers that were very impressive hitting the tape, but the market really didn't budge. And in some cases, and in a lot of cases in the technology side of things, we actually sold off. So that's not the ideal reaction you want to see. It doesn't have to be the end of the world. It might just mean chop and digestion, but that's something to certainly take note of this week. We saw the VIX close highest in the past 4 weeks, also notable, up around 18. We'll look at that a little bit later. And on the flip side, we have breadth that is still hanging pretty strong. So the indices couldn't really rally much this week, but the average stock, the individual sectors, have been continuing to kind of hold up, and we're going to talk about that in just a little bit. Now, if we jump into the numbers here, you can see equity market performance on this 1 week return is negative across the board. So all of the major indices closed negative or pretty flat. So the S&P 500 in that particular case there was basically flat on the week. Dow Jones down about 0.5%. So was the Nasdaq. Russell down about 0.25%. And world stocks were down a little bit harder, 1% on the week, maybe due to the rally in the dollar, that sharp rally in the dollar, putting maybe a little more pressure on world stocks outside of the United States. So you can see, again, strong earnings, lackluster performance in terms of top level indices. Now let's actually go a little bit under the hood here. And this is why it's so important to take the extra step, look at the actual market internals underneath the hood to figure out and to get a better picture of what's going on. This tells almost an entirely different story. So while the indices were flat to negative on the week, market internals were extremely positive this week. Monday, Wednesday, Thursday, all having 300, in Thursday's case, 427 net 52-week highs made minus lows in the NYSE. That's a very impressive number, 1,400 on the week. Those are healthy numbers to put up there. Even the cumulative AD line, we hit 2,700 this week, also a pretty encouraging number. And if we look at the percentage of stocks over 20 SMA in the S&P 500, it's back down to 66%. So it's cooled off. This week has, let some of the moving averages catch up to some of these strong stocks that have been trending very strongly. And we're seeing a little bit of a reset there in terms of this indicator. If we look at this on a trending basis, this is also, again, just showing a tremendous amount of strength under the hood. There are still plenty of stocks that are being bid up, that are breaking to new highs, and there are very few that are at new lows or breaking down to new lows. So that to me is still encouraging. And when we look at sectors on this week as well, again, tells a very different story than if you were just staring at the top level, how did the Dow Jones do this week? Oh, it was down 0.5%. Sounds like stocks did, kind of bad this week. But if you look at breadth and if you look at individual sectors, you see a much different story here. You see that actually the majority were in the green. Energy was the leader, 3.77%. That is clawing back here. Notice it's the only sector that's in the red for the past 1 month. So we saw a bounce back in energy. Financials, communication services were the top three. On the downside was technology, and we got all of those companies, a majority of those companies reported earnings this week. So that's what got hit. And also keep in mind, and this is kind of why the numbers are how they are, is that the market averages, S&P 500, Nasdaq 100, those are market cap weighted indices. So that means that the larger their company is, the more it is moving and influencing the return of that index. And so when the 5 stocks that make up 50% plus of all of these cap weighted indices sell off due to earnings or trade sideways or slightly down, this is what you basically get. This is how you see the market sort of separate underneath the hood. So that's the landscape in terms of sectors. If we look at correlations, so I'm kind of cheating here, and this goes to show a little bit on why you have to be careful with correlations and how that data is presented to you. We tend to look at the 10-day rolling correlations in the market, but I decided to sort of cherry pick a little bit here and look at the 1 month. I usually look at both the 1 month and the 10-day. The 10-day is very short term, just really tells you kind of what's moving together in the very near term. The 1 month is a little less noisy, and so traditionally, and especially if I'm trying to do any real sort of insights, I'm mostly looking at the 21 day, which is the 1 month. And when we look here at the 1 month, what you still are seeing is this extremely strong negative inverse correlation to what the dollar is doing. So for the past month, we've basically seen the dollar continue to sell off, and we saw stocks benefit. We saw commodities mostly benefit. And that is the environment we've been in, and that's what's been working. Now, coincidentally, especially here on Friday, the dollar put in a pretty good reversal candle, pretty good reversal session. We're going to talk about that a little bit later in this video. And so if we are going to see a dollar that's going to get some legs and bounce a little bit, and we know that stocks tend to not like when the dollar starts moving higher, then this could also give us some of the fuel to potentially see some type of sell-off here. So I think it's interesting to, again, point out the strong dollar correlation over the past month of trading. If you're just looking at the past 10 days, the past 5 days, it's a much weaker correlation, I think around 0.5 or so last I checked. So I think that's interesting, something to take note of, and something we're going to talk about a little bit later in this video. If we look at volatility, so we basically saw volatility climb, and we saw the curve maybe slightly less of such a steep front month to 3 month VIX here. But basically we saw again the whole volatility term structure just essentially raise up a point or two. We're trading at an 18.56 VIX, not back into the 20s, but it is certainly a higher level than we've seen in the past few weeks. So we'll talk about that a little bit later in this video as well. If we look at interest rates and credit markets, so interest rates were rising across the board this week. So we saw 5, 10, and 30-year yields all up. We saw the bond markets, or investment grade and high yield bond, they were sort of mixed this week. We saw investment grade bonds down about 0.38%. High yields were still up. So we'll pay attention to that. Not a whole lot of, sort of interesting movement there by LQD or JNK at this time. If we look at dollar and commodities, here's the dollar move we just mentioned. We saw the dollar index up 0.49%. We saw gold down, silver down. Bitcoin, though, really sort of bucking the trend. It was up big, 15.47% on the week. Now, Bitcoin had been trailing, had been underperforming and selling off the past couple of weeks. So in some respects, it's kind of mean reverting back up and getting a nice little bounce. So that was certainly working nicely to the upside. DBA also continues to work. Oil was working. Natural gas also working this week. So if we look at the report card, everything taken together here, there were only two sort of bright spots, market breadth, and we saw some good performance out of sectors, and in specifically the risk sectors. So report card on the week was a C, not the best, not the worst, room for improvement, and that's sort of the way we're thinking of this market right now, as there are more cross currents here than we've seen in recent memory. Now, if we look at our trading systems, Merlin is just remaining the course here. It is dead set on sort of continuing to allocate to this market. Again, its time horizon is a bit longer, but really no change here. It's still just essentially all in on the markets, fully invested, and that's what we're still seeing there. Now, it has been taking profits, which you don't see as the intra-week changes. I mean, it's not a big amount of changes here, but as we see things extend to the upside, the system's, harvesting gains, but it's just quickly finding other opportunity, and it's just putting trades right back on. That's why you basically are seeing it just sit up there at nearly fully invested. There is some trading underneath the hood. Lamerick has been more active. It is much more defensive. It is not in love with this market here. It's holding just 3 positions. I think it's got 1 short trade on, 2 long positions. It's 8.66% invested. So you can see much more tactical, calculated, positioning right now, and we sort of run both of them at the same time, or at least I do. I split my money between the both, so you get that balance between one system that's all in, the other system that's pretty much all cash or pretty close to cash, and that's sort of the way I like to think about things and view the market. On a week-to-week basis. So if you want to learn more about that, click that link appearing in the top right of the screen. Learn more about those 2 trading systems, see if they can help you. And with that, we'll be back with part 2 in just a minute. All right, we're back. We've got TC 2000 open. We're looking at our equity market grid. So we get the S&P in the top left, Nasdaq top right, Russell bottom left, world stocks minus the United States in the bottom right. Now, weekly time frame here. So we have price itself is the white dashed lines, and we have a custom smart trend filter that we've developed, measures price and volume across time, and helps us measure trend strength, path of least resistance by these green, yellow, and red dots. So if we look here at a weekly time frame, nothing has changed in our outlook here. So probably not a whole lot of a surprise. Markets were all fairly stagnant this week, so no real change in terms of price. And if we look here at our weekly trend filters, you can see we still got the S&P and the Nasdaq are still in bullish trends. Russell in the bottom left here is still in a neutral trend right now, or a warning trend, right? So we tend to give the benefit of the doubt to the prior signal, which is still bullish here for the Russell 2000, but we are seeing that there is some degree of choppiness, indecision, and cross currents going on here in the Russell 2000 by this indicator. Bottom right, world stocks, despite the 1% down week, we are still in a bullish green trend. Now let's take this to a daily chart. Let's get a little bit tighter on the action here. And we saw some transitionings happening here on Friday. So not for the S&P 500. The S&P 500 on a daily trend outlook here has been bullish since the end of March. And quite honestly, it was really sort of bullish since the beginning of March, because the first true up signal from a red to yellow transition happened back on March 11th. So if you're just following this simple indicator, this trend filter, then you've essentially been, invested or long or trading to the long side here since March 11th. And there's been no change in that, even to Friday's close and to present time. In the Nasdaq, we've got a little bit of turbulence now starting to creep in here. So notice that the trend filter now has turned yellow. So the Nasdaq is saying, okay, we've got some warning signs here. Let's start paying closer attention. We might be at a spot where the trend is going to change directions. Hasn't happened yet, but it tells you to start, putting up those, raising up those binoculars and looking a little bit closer. Same thing for the Russell in the bottom left, and then same thing for the ACWX here in the bottom right. So 3 out of the 4 here are now signaling a little bit of some warning signs. So when we get that, that's especially when we like to look a little closer. So let's get into some of the closer action here with some candlestick analysis. And if we look here at the S&P 500, This was the same chart that we looked at last week. This is exactly how we were framing up markets. We said, we had kind of the lower end of this chop in here around 41.21. We wanted to pay attention to that key influential level. That's where buyers were stepping up to bid up this market. So if we started to lose that or break down from 41.21, that would be a short-term bearish development. And on the upside, we had this 41.92 level, and we were looking for that for a breakout. And we essentially got neither. We got some chop that basically took place right along this resistance, right along the top end here all week long. We tried to break out on Thursday. We in fact got a new closing all-time high for the S&P 500 on Thursday, but we gave it all back on Friday. So we're at this pretty interesting inflection point, and I would say we are primed here for some directional movement coming in early next week. We traded this entire week here in such a small and tight range that we are, likely going to be experiencing some different prices here come Monday. So I think we're going to be at an interesting spot. The question's going to come, is it in the direction of the primary trend, and do we just pop back to the upside and life continues on as good and rosy as it has been for the bulls? Or is this the turning point? Is this the fact where we tried to break out, we got through the bulk of earnings season, and earnings wasn't good enough to catalyze us through and continue this trend, and therefore we are due for some selling? That's the big question. That's what we're watching, and the levels are just very, very clear to watch here, because you essentially have now the lows of this week, which is around 4170, let's call it. It's amazing how tight this really is now, but something like that. So if we start rolling over, if we start finding follow through to Friday's selling, then I think you could be a little bit near term cautious, and that 41.21 level is what you would pay attention to see if sellers are strong enough to break us down below this level. So that's sort of the way I'm framing up this market right now. We're getting warning signs. We're extremely tight here, moving sideways, but we haven't broken down yet. Trends are still up, so you're kind of at this decision point and a wait and see sort of mode. That's the way I'm looking at this market in the very, very short term. Now, if we look at, say, the Russell 2000, you can see this is definitely trading in a sort of different pattern and behavior here. This is going sideways for the past couple of months. We've talked about this wider range that this has developed. We did not break out to new highs this week. We did not get back up really anywhere near, well, it's not that far away, but let's see. Yeah, we're a little over 1%, 1.5% away from those prior all-time highs. So we didn't get up there. We essentially kind of pushed and then rolled over a bit here into the end of the week. So for the Russell, there's really just no change at all in my outlook. It's still kind of the messiest of them all. It's just been moving sideways in a wider range, and it just needs more time in my book to either start trending or tighten up a bit more in terms of its swings. If we look at the Nasdaq 100, so the Nasdaq 100 here is also now very, very tight over the past 2 weeks worth of action. So if we go back to the 13th of April, that was the breakout day where the Qs finally broke over the February highs. And since that point, it's basically been chopping and moving totally sideways. So we've got now a couple of weeks of sideways price action. We've got a tight range that is developed here. Let's call it between the highs here around 342 and change, and on the downside right around 334. This is the tight range that we're looking at. We're sideways in the direction of a primary uptrend, but same kind of comments and analysis apply, just like we're thinking about the SPY. Let's see how this ends up resolving this range. So that is, I think, at a high level what's going on here. Positive earnings, lackluster reaction. We've got tight ranges in the S&P and Dow. Trends are all still bullish, but we're starting to get some warning signals. Let's jump into the UUP here, which is the dollar. And this is where things get a little interesting, because if we look at this candle on Friday, we got a gap up and a strong push and heavy volume after about 4 weeks worth of selling. So you start to put the pieces together here and you think to yourself, okay, we got a dollar that looks like it might still be in a downtrend. I don't know if that's going to change, but even if we got a retracement, we got to move a trade up in the UUP, the dollar index, up to around 24.85 or so. That's probably going to pressure markets. That potentially is what's going to get the S&P 500 to crack and start rolling over a little bit if this dollar gets some follow through next week. And then we can kind of throw in the VIX in here and say, okay, the VIX is getting a little jittery up here around 18. It hasn't liked staying above 18 here, but if we get some follow through next week over 18, 19, and we start actually closing back up at those levels for the fear index here, then I think you have the ingredients for at least a short-term sort of pullback, rug pull in this market, or a little bit of a quick reset. Not sure it happens. Again, everything right now still points to bullish, but I think it's a point where we should be focused as traders, especially in the short term, if you're looking for turning points. So that's my read there on how broad markets are faring and looking. Let's look at some other markets now. We talked about the VIX. So we know that's sort of popping a little bit. Let's go to a daily chart. You can see trend filter starting to go back to neutral now after a very, very long period of a sell signal on volatility. You can see TLT is kind of chopping around here. It is still trying to hold its bullish trend here in the TLT. It was bullish for a while. It flipped down to neutral. So it's battling at its trend filter. And if we look at commodities, you can see oil is back to bullish trend. DBC is at bullish trend. And gold and silver are both sort of in the yellow right now. This is a weekly time frame. If we go down to a daily chart, you can see that gold and silver were recently in the green state, but they are back now in yellow, and that's sort of the way they're looking at this time. So let's move over to some of our sector and industry scans. So this is kind of the last segment we do here, where we look at some of the notable moves out of individual sectors or individual industries, which industries, again, are even more specific and comprise of individual sectors. So if we look at the things on the bullish side, we saw a pretty good mix this week. So we can look at our first one here is aluminum. And if we look here on a weekly chart, it didn't close all that pretty here on the week. So it did close closer to the lows than it did the highs. But on a relative basis, aluminum was up 2.84% this week, and it was green, and it did close at new highs. So on a relative basis, we still got some good action out of the basic material sector there. Advertising and agencies here. So you can see, again, lifting to new highs, up to 2.45%. Let's take a look at some of the stocks in this space. Looks like 31 stocks make this up. And you can see some of the names here that are in this list. I'm not going to go through those. Let's see what else we got. We got sectors here. So consumer defensive, confectionaries, or confectioners, were making new highs this week, 2%, strong volume, good looking action there in consumer defensive. Food distribution also doing well. So there's that defensive tone of the market that's working. We got one oil and gas creeping in here. So oil and gas midstream. So if we look at some of the stocks that make up that, wow, that's a big list, 72 stocks in this oil and gas midstream. So you can see breaking to new highs there. That's a strong move we saw in the energy markets. If we look at capital markets, so in financial services, capital markets, you can see breaking to new highs. Insurance brokers also working. Shipping and ports also working to new highs. Aerospace and defense working to new highs this week. Rental and leasing services, again, not the best looking candle on a relative basis, though, did pretty well. And we only got one technology, and this was in internet content and information, was closing up this week as well, close to new weekly closing highs. Now on the downside, we've got more on the downside than we've seen in some time. So this list has basically been pretty barren. Nothing at all really kind of showing up here on the bearish of interest list. But we got 5 industry sectors that are showing up here. Coal is one. Coal was down 6.65% this week, so closing at the week's lows. That's pretty bearish. Education and training services also still finds it pretty tough environment right now. This is well off of the highs. Does not look anything like some of the major indices, so this is in a tougher spot. We got a tech play here, scientific and technical instruments, seeing a very high volume bearish outside reversal. So that's significant. Solar kind of back to the recent lows here. Solar's interesting. Looks like it might want to break down again and make a second leg lower. We'll have to see if that actually happens. And then staffing and outsourcing services, also putting in some heavy volume and kind of pulling back from highs. So that is everything I have for this week's roundup, market analysis, and prep for next week. Hopefully you found this video helpful and interesting. Leave a comment below. Let me know what you're looking at heading into next week. What stood out to you? What's most interesting? Leave a comment. Love to see what everybody else is up to. And as always, I thank you for tuning in and watching. Every Friday, we publish our Friday long-form market analysis videos just like this. You can subscribe to our YouTube channel or follow us at thetraderisk.com. Have yourself a great week, and we'll see you back here next week.